It's very good to follow a structured framework for your investing. This helps you cut through all of the noise, the media, your friends and family and fellow investors on any social media outlet, and help you make personal choices about your investment portfolio, your money. Welcome back, everyone, to Chip Stock Investor. Happy Monday. We're here again. Hope you all had a great weekend. Nick and I were able to spend some time outdoors, and that was super refreshing. We got a little hiking in. Sorry if I sound a little stuffy, though. My allergies are, of course, in a raging fit because we were outside.
Analog refresh didn't have quite the effect you were hoping, did it?
It was worth it. Very well worth it. But first, we wanted to acknowledge that we haven't done a ton of earnings updates for this first quarter of 2024, especially in comparison to what we did in Q4. But it's mostly because the Q4 gives us a full picture of the prior year, and it gives us a good overview of what we can expect. And so we don't make a bunch of changes, and our adjustments tend to be minimal. And that's ultimately why we haven't done a ton of quarterly updates in Q1. However, that doesn't mean we haven't been hard at work. We still believe that the semiconductor industry as a whole is poised for a breakout in especially the second half of 2024 with the potential for multi-year growth. This has allowed us to look at some new companies, and we wanted to do a refresher on how we look at investing in companies, what our investing framework is. We did a video about this last year in the light of KLA Corp. And this year, we wanted to do a refresh and update on this method for our viewers in the light of a company, Vishay Intertechnology.
Yeah, if you'd like, link to last year's video. We did an overview of our process, and actually we did KLA and onto innovation and explained why we had taken positions at both of those stocks, both of which have done quite well since then. But yeah, Kasey, this came up because in our last video on air test systems, we explained that we believe Vishay Intertechnology, ticker symbol VSH, is the latest silicon carbide customer buying air test systems, test and burn-in equipment. Since this is a company that we're researching from scratch, but we also had it on our schedule to do this refresh on our investment framework. So we're combining both together. We're not going to tell you if we're interested in Vishay Intertechnology or not. Thought it would be kind of fun if we show you the process. You can take a look at it yourself and then decide for yourself if it meets your criteria for investment. And we'll hold back for now in saying what we feel about the company.
Here at Chip Stock Investor, we follow the top-down investment approach. That starts with macroeconomic factors such as GDP growth or things like, is the economy headed for a recession?
More importantly for us, though, we don't spend a whole lot of time on the very, very top of the funnel, the macro factors. Instead, we really pick up there around step 2. We look for what are known as secular growth trends, what industries are growing, and why. Then we start looking at the individual components within that secular growth trend, industries, different businesses that are the leaders within that industry, and then continue down from there. And obviously, as our channel name implies, the semiconductor industry is exactly one of those secular growth trends. It's why we started Chip Stock Investor in October 2022. We still believe the global semiconductor industry is headed towards $1 trillion in global sales by 2030, or give or take some billions of dollars around that mark. At any rate, secular growth trend. And so where we actually end up spending most of our time is dissecting the industry itself, figuring out who's who and who is going to win the most, figuring out what business models are going to have the best competitive advantage, not just in a current bull market cycle, but for the ultra long term.
So let's go through all of our steps that we do here at Chip Stock Investor when we're first analyzing a business. Before we jump into all of our steps that we use to analyze a business, make sure you're subscribed to the channel. Also, if you'd like access to our Discord channel where we talk about businesses in depth and provide all of our show notes, make sure you subscribe here on YouTube or join the membership on Ko-fi. It's just $5 a month and gets you a wealth of information. Make sure you check it out. That leads us to our very first step in our business analysis process. And this is kind of a difficult one to follow. It's no searching on Google. Don't check out social media, and no peeking at the valuation or stock price action. You need to save that part for later. This is crucial.
Yeah, it is crucial. And it's hard to do. Maybe try like for the first 10, 15 minutes as you dig through what a business does to not look at a stock price chart. We think that's really important. Try not to look at the valuation if you're going to try to follow this top-down approach, because knowing information like that can color the rest of your research and create a bias towards you thinking a certain thing before you find out what the business even does in the first place.
Let's move on to number 2. This is where you want to find a brief history of the company. You can do this on the company's website, as we have highlighted here. You can look under company or their product section to find out what the company provides. Who founded the company? When? Have there been any transformative changes at some point in time, maybe in the last few years? I think this is something that I fall into the trap of many times. I go right to the investor presentation because it's the most pleasing to look at. However, this may not provide you with the most unbiased information, so it's very important not to do that right away. We'll save that for later as well.
Yeah, and to be completely fair, just going to a company's public-facing website, not the investor relations page where you would find the investor presentation, can also push you into the company's narrative that they want to control. But what we're trying to find here is just a very brief overview, which then leads us to step 3. After we've gotten a very high-level view of what a company actually does to make money, now we want to understand a bit more detail of how it is they separate people from their dollars. What is it that they provide that people say, here, take my money. I want what you're making, or I want what you're providing. To do that, we're looking for the latest annual report, or 10K, that is filed with the Securities and Exchange Commission, or SEC, and start reading. We have that highlighted here for Vishay on the actual investor relations page under financials, SEC filings, filter for annual filings, and then click on the PDF when you find the last 10K in that list. And the first page that we're going to is item 1, business. And so we click on that, and what follows for every single company files a 10K with the SEC is an overview of what the business does, a little bit of their history, and how they make money.
Specifically for Vishay Intertechnology, based on what we found in that business description section, we're going to place this company under integrated device manufacturers on our semiconductor industry flow. Now, let's talk about what we should search for in that 10K besides the business description. Now, this next part may not be as cool as just asking ChatGPT or Gemini what patents, competitive advantages, etc. a company has. However, this is a tried and true method of finding out the facts. So when we're in the 10K, we hit Control F and then key in some search terms that help us understand the business more fully. Things like competitive advantages, competitors, patents, technology, geography, and legal proceedings or legal. All are great search terms to help you understand exactly what the business does, who they compete with, and whether or not they're in any legal trouble.
Now, again, as Kasey mentioned, we do have that membership. And if you want to chat with us over on Discord about more of the search terms that we use Control F on in a PDF document or any website for that matter, hit us up over on the Discord channel. Okay, so after reading the business, item 1A, risk factors, is another important step. Now, many of the items that you'll find under risk factors are just boilerplate paragraphs that are copied and pasted in there from the company's legal team. So we really just kind of scan through this. But what we're looking for is anything that is irregular, something that has been customized or written that is specific to the business. You'll get good at this if you look at enough 10Ks, because you'll notice many of these risk factors are exactly the same from one company to the next. So again, what we're looking for are specific items that might be unique to that business. And so what we'll find with a company like Vishay that's an IDM is we have this framework where we've pinpointed different parts of the semiconductor industry, and we know IDMs are highly competitive. Everyone from Intel to Texas Instruments to even small elements of Qualcomm and Broadcom are integrated device manufacturers. We did a video last week on semiconductor, one of our favorite integrated device manufacturers. You're going to find that there are a lot of specific risks to Vishay that deal with competition and not having a very good competitive advantage, given how really fiercely competitive this part of the semiconductor industry is. Let's move on to this next step, Kasey, because you mentioned using ChatGPT or Google Gemini or some sort of AI chatbot.
Yes, here at Chipstock Investor, we use primarily Google Drive. And so Gemini is a perfect integration for us personally. So we upload the 10K PDF to our Drive account, and then we go to Gemini and we can enter that prompt to analyze that PDF that we've uploaded. And then we can ask questions. This is where we can use some cool technology to help us get some background information and help us build out this story. And we had a member on Discord that pointed out a really great feature that can go through PDFs very accurately, or at least more accurately with greater contextual search. And that's using ai.google.dev. So we've been starting to use that. You can see a picture of that here. We still back up our findings from Gemini with Control F so we can verify the information.
Yeah, sometimes there's just no hacking the old tried and true way of doing things. Step 5. This is something that we have really developed a bit more recently due to some small amounts of money that we placed last year on a small cybersecurity business called SentinelOne, ticker symbol S. And as we continued, we'll talk about this a bit later, we tend to nibble when we pinpoint a business that we're interested in. We'll take like a very, very small initial position and then continue to learn. And as we were learning about that business specifically, I think we added this next step, number 5, as something that we want to check more frequently. And that's, who are the shareholders? Now, you can find this in the 10K as well. So Control F, shareholders or share class, because a lot of businesses may have different types of shareholders that have different economic interests in the business itself. And that 10K is where they will describe how that works. What we're showing you here is our ticker terminal, TIKR.com is where you can find that. But on the shareholder screen, this is a quick and easy way to find who exactly a company's shareholders are. Most of it are institutional investors.
Step number 6. This is when we start dissecting the financials of the business. We start with the revenue as well as operating margins. And this graphic is showing exactly that for Vishay Intertechnology, their revenue since 2012, as well as their operating margins. We then move on to free cash flow.
Yeah, that's right. Free cash flow, of course, a non-GAAP adjusted metric, but it paints a very different picture of the business than those operating GAAP net income figures. And then, of course, related to free cash flow, part of the calculation for free cash flow, operating income minus capital expenditures. That's how you arrive at free cash flow. So what is the cash left over for the business and its shareholders after their operations generate cash, and then you subtract any big expenses on property and equipment? So here's CapEx for Vishay. You can see those numbers jump up pretty aggressively in the last 2 years. And after that, we're looking at the balance sheet in particular. High-level take on the balance sheet, very simple: cash and short-term investments, and compare that with long-term debt to see what kind of liquidity the company has on hand to fund things like future capital expenditures.
The reason that we look at financials later in our process at step number 6 is that we want the financials to confirm what we've already learned about the company. Do the numbers actually jive with what the company is saying, what the story they're trying to tell is? And then if any historical anomalies pop up during our research, big dips in revenue or profitability, for example, or big balance sheet shifts, now we know what we need to use Google search for to speed up our process and looking for past data, how to get answers to those questions.
Yeah, that's exactly right. And we just showed you very quickly the big increase in capital expenditures for Vishay, as well as the balance sheet getting a little bit closer to net even cash with debt. So obviously the company is ramping up its spending on something. What is it? At this point, now we know a little bit what to start looking for to cut through all of the noise. And this is where Vishay entered our radar last month when we were doing air test systems. Vishay has been spending to expand its semiconductor fabrication output the last couple of years, like pretty much every other power chip and analog semiconductor manufacturer has been. But in particular, Vishay has entered the silicon carbide or SiC power chip market, addressing things like electric vehicles and other high voltage applications where energy efficiency and less energy loss is key. So they made this big acquisition of a wafer fab in Newport, Wales in the UK. And so now we know where some of the company's cash has been getting funneled. We also know that there's a new management team at Vishay as well, taking over for this phase of the company's growth. This company has been around for many, many decades, hasn't really been much of a market outperformer, much less a semiconductor industry outperformer. It's been quite the contrary. It's underperformed, but it looks like they're now willing to make a bigger, more sweeping bet to change that. And they've narrowed in on these silicon carbides as a way to do it.
Let's move on to number 7. This is where we get to the valuation numbers. And Nick, maybe you can explain how far in depth do we go in valuation?
We do like to keep it simple. And I already mentioned at the outset of our process here, this is not where we spend most of our time. What we're using valuation for primarily is to either confirm what we think we already know about the business up to this point, or maybe the valuation is telling us something different than what we expected and telling us, hey, you need to do more digging on the business. You're missing something still. So we keep it simple, price to earnings and price to free cash flow metrics. Sometimes we're also using this on an enterprise value basis where we back out things like net cash or net debt or include net debt balances in the valuation of the company. What we're also looking for is historical per share trends, especially free cash flow per share, to see what management's past track record is. We might also check things like return on invested capital and maybe look for more discrepancies between that and the free cash flow per share growth. That might also tell us a story like maybe this business has been generating great returns and maybe management doesn't really have that great of a track record on deploying capital to grow the business. And additionally, that's on a backwards looking basis that really doesn't help much right now and going forward. So that's where something like a reverse discount cash flow or DCF method will help us figure out what the market's current assumptions are right now. And then based on what we know about the industry and the composition of the company's business model, if those assumptions the market has, if they're overly optimistic or maybe they're overly pessimistic. In addition to a reverse discounted cash flow, maybe something much simpler like a PEG ratio, PE to growth, expected growth. That also might be helpful in determining just how optimistic the market might be on any particular business. Again, not a step that we spend most of our time on. What we're really using valuation for is to confirm or disprove what we think we already know to see if we need to continue analyzing the business. And the reason why we don't spend a ton of time on valuation is as you'll hear us say frequently, especially for our Discord members, is all valuations are subjective, all of them. It's going to be based on what inputs you choose to utilize or which inputs you don't choose to utilize, and they are always going to be wrong.
Then after this, it's a good time to compare those valuations that you found to the company's competitors. Are they higher or lower? And analyze why that is.
Yeah, maybe big spoiler on this. Vishay appears on the surface to be far cheaper than many of its peers. We'll let you try to figure out for yourself why the market has a seeming big discount on this particular IDM versus some of the bigger names in the industry, like, say, Texas Instruments or on semiconductor.
Okay, if you got through all of these steps, now it's time to look at step 9. So this is if you're still interested in making a possible investment. Now you can finally go to the investor page and look through earnings calls, transcripts, slides, and any investor events that the company may have had. What are the current business goals? What are the long-term growth goals? Are there any profit targets in the coming years? This is the time to see what picture the business is trying to paint for investors.
And this is an important point, Kasey. This is why we wait as late as we possibly can stand it to look at investor presentations. This is a slide from Vishay's presentation, and things like this tend to get glossed over a bit, because what this is really telling us is this is a business that operates in a highly competitive industry. It has a lot of parts and pieces that it manufactures for customers that are a commodity. The customer can go and get many of these other parts and pieces from someone else. So there's not a lot of competitive advantage, but you'll see slides like this, and there's always a narrative that kind of glosses over what we're looking for. So this is why we try to wait until late in the process to look at things like this, so that we can maybe cut through some of the noise that management is putting out there to tell the story that they want to tell.
Ultimately, it's very good to follow a structured framework for your investing. This helps you cut through all of the noise, the media, your friends and family and fellow investors on any social media outlet, and help you make personal choices about your investment portfolio, your money.
And we were discussing this a bit when putting together this refresh on our framework for all of you. Kasey, we've noticed many investors, if they have a hard time saying no to making an investment in a company, oftentimes the reason is they're not starting with unbiased information. They're starting with information that has already been colored by one source or another. For example, going straight to the last investor presentation or the last slide deck company puts out before looking at something like the annual report could lead you to say, yes, I want to invest in a business, before you really actually know if this is a business that suits your needs or not.
It's all psychology. It's all mind games. We're going to leave it at that. We won't tell you what we decided to do with Vishay Intertechnology. We'll let you decide after taking a look at some of these financials that we put forth in this video. And you can find all of the details and the answer to that question, what did we decide to do, in our manual, which is over on Discord. That's a wrap for today's video. Please make sure that you have subscribed to the channel and have notifications turned on. That's a great, free, and easy way to support us here at Shipstock Investor. And again, if you are interested in that membership, check it out here on YouTube or over on our Ko-fi page. We appreciate all the support. It's just $5 a month, and it gets you a ton of information and research and access to us over on our Discord channel, as well as all of our video notes and published manuals. We have much more coming your way this week at Shipstock Investor, so we will see you soon.